Life Insurance Exam Terms and Definitions Exam K, Joint Life Policy. Covers two or more lives and provides for the payment of the proceeds at the death of the first among those insured. Extended term non-forfeiture option. Use the cash to buy term insurance for the same death benefit as the original policy for as long a time period as it will buy. Lump sum, LIFO, installments. LIFO foam first foam taxed installments beer and foam. Whole life insurance. Also call straight life insurance. Level premiums paid to age 100. Reinstatement provision. Applies to the timeframe that an insurer hasn't paid premium but wants the policy back. You have 3 to 5 years to reinstate. Proof of insurability and back premiums plus interest would have to be paid. If you haven't heard back in 45 days, then the policy has been reinstated. Policy premium is based on original age. Uniform Simultaneous Death Act. A uniform law adopted by most states providing that if the primary beneficiary and the insured die in the same accident and there is no proof that the beneficiary outlived the insured, the proceeds are paid as if the primary beneficiary died first, which means that the proceeds are paid to the contingent beneficiary, also known as the Common Disaster Provision, Common Disaster Clause. When insured and primary die at the same time, it is assumed that the primary died first. Sets a time limit. X. If primary beneficiary dies before 30 days, contingent beneficiary will receive. If after 30 days, first beneficiary will receive. If no contingent beneficiary, proceeds would go to insured's estate. Variable annuities. Payments fluctuate according to the value of an account invested primarily in common stocks, annuity units. Adjustable life insurance. Can adjust the policy's face amount, premium, and length of protection without ever having to complete a new application/policy. Interest-sensitive whole life. Premiums vary to reflect the insurer's changing assumptions with regard to death investment and expense factors. Dividend options. 1. Cash, tax-free. 2. Apply to future premiums. 3. Accumulated interest/sits in account. 4. Purchase paid-up additions. Surrender cost index. Useful if the owner expects to surrender the policy after some time period. Adding up total premiums paid, minus dividends, and subtracting cash value. Waiver of cost of insurance, waiver of deduction. Found in universal policies. Only pays enough to keep the policy in force. Graded premium whole life. Premiums start off lower than straight level, then gradually increases year by year for 5 to 10 years, then levels out. Outline of coverage. Also called disclosure form or disclosure statement. 1035 Exchange. 1. Exchange life insurance for another life insurance policy, endowment contract, or annuity. 2. Exchange endowment contract for another endowment contract or annuity. 3. An annuity for another annuity. Annual renewable term, ART. Level death benefit. Premiums go up each year based on the insured's age. Reduced paid-up non-forfeiture option. Use the cash to buy as much of a paid-up policy as possible. Policy cost comparison methods. Surrender cost index, net payment cost index. Non-forfeiture options. Cash value, reduced paid-up insurance, extended term insurance. Cash value non-forfeiture option. Take cash value of the policy and leave. Net payment cost index. Useful if the owner expects to keep the policy in force. Calculated same way as SI but cash value is not subtracted. Taxation rules for life insurance policies. Premiums, not tax-deductible to individual, yes to employer's death benefit, tax-free if a lump sum named to a beneficiary death benefit paid in installments, principal is tax-free, interest is taxable income. Variable life insurance. Cash values are invested directly in a securities product such as stocks, bonds, or mutual funds, held in a company separate account. Family maintenance policy. Whole life policy with a level term rider. Maintain family after the insured dies. X. Monthly income for 10 years after death of insured, plus lump sum. Modified life policy. Whole life insurance with reduced premiums during the initial 3 to 5 years, then a higher, level premium for the remainder of the insured's life. Family policy. One package that includes coverage for everybody in the immediate family. Waiver of premium rider. A form of disability insurance attached to a life insurance policy to pay the premium on behalf of the insured in case they become totally disabled. Biatical settlement. Also called a life settlement. Adjustable life insurance. Able to adjust, premium amount face amount period of protection premium payment period. Joint survivor, second to die. Covers 2 or more lives and pays death benefit when the last insured person dies. Family income policy. Whole life with decreasing term rider. X. 20-year FIP, insured dies 6 years into policy, term pays out monthly income for 14 remaining years, then whole death benefit lump sum is paid at the end. Payer benefit rider. Found in juvenile policies which waivers the premiums if the person paying them, often the parent, is disabled or dies while the child is still a minor. Settlement options. Cash, take money in one lump sum interest, proceeds retained by company, interest is paid periodically such as monthly/annually fixed period, installment payments for a fixed period of time fixed amount, installments are paid for a specific amount for as long as they last life income, proceeds used to purchase an annuity.